Dan, out of the 2000s wreckage, there were some names that actually survived. Are there some names that are worth watching in ARK?
Yeah, sure. And I guess, we spent a lot of time talking about this because I've never seen a portfolio so poorly constructed when you think about these names and her continued insistence that she's investing in innovation. And again, I look at some of these stocks, though. I'll go the other way, Frank. I look at a Square. I think Square or Block or whatever they call it now, I think that thing could drop another 50% from here. If you think about it, it's COVID lows. It's March 2020 lows, I think, was in the low 30s. The stock's trading around 60. PayPal is well below its COVID lows. I think PayPal is a much better company, trades at a much more reasonable valuation. Some of this other garbage in there, like Roku, we've been saying this for a couple years now. Throw it on the trash heap of useless tech. She's still really long that. Zoom is probably the only one that has decent valuation, but again, I think there's lower lows. I think this thing that people would pay any price for 2 years ago, and now it looks like a reasonable valuation, but there's some funky stuff in there too. That thing has much lower lows. So again, it's not what it is advertised, I think, as like this crazy innovation. And I'd say this, maybe Tesla is the most innovative company in there, but that thing has much lower lows in my opinion.
So really quick, Dan, you obviously have some strong opinions about this. We were just showing the ARK laggards a second. The number one is, on the list at least, is Tesla. UiPath, the second one. That's an automation company, automation software. Hard to believe that that's just junk tech. Teladoc, we know what that does.
No, Frank, hold on a second. It's not that it's junk tech or not. These are publicly traded companies. If you tell me it's a VC-backed company and it's in the private market, pay whatever multiple you want for it, okay? And then take whatever time horizon you want. But there are laws that exist in public markets. They've existed for 200 years. Remember Elon was telling some investor of his own stock to go look at securities analysis or some book on it or whatever. Just because things went haywire over the last couple of years, and investors were willing to pay whatever they thought they would pay for this stuff, and people like Cathie Wood are marketing it as innovation. It just doesn't make sense in public markets. So just as they overshot to the upside, way overshot, they have the potential to way overshoot to the downside.
All right, Courtney, I want to come over to you. We also have a list of the ARK Innovation top holdings that we're about to show in just a second. Do you see anything in the ARK that you think is, I guess, salvageable after a really big downturn this year?
Yeah, I mean, there might be bits and pieces. You might be able to pick some individual stocks, but the ARK Innovation Fund has really become the poster child for your growth tech stocks, which have really underperformed this year and likely are going to continue to underperform. I think what's really fascinating is if you look at the ARK Innovation Fund, it went from a high of in February, almost $28 billion in assets, down to about $6.5 billion recently. And interestingly enough, that's with clients adding, I think, almost $1.5 billion of assets over that time frame because people are actually buying into the dip. And I think this is something I just want to continue to remind investors. I know we've talked a lot about this on the show, but this story doesn't end here. If we do continue to have higher rates next year, these are going to continue to be under pressure. We've seen this in the past. I mean, I don't know if we're in the tech bubble, but you did see this where you had periods of tech companies underperforming for a decade, and that can happen again when valuations are so high. And I think you really want to be cautious of that as you go into 2023.